So in this lesson, we are going to talk about the sale and the payment for depreciable assets. So whenever we sell depreciable assets, there's money coming in, there is some cash inflow, and whenever we buy a new depreciable asset, okay, there will be a cash outflow because we pay for the new assets. Okay, so when we are talking about non-current assets and depreciable assets, okay, there are a few things that we need to look at. Okay, we have income statement here, we have balance sheet here, and this kind of question we have a lot of patterns, okay, and we can ask you in many different ways. So now I'm going to show you one of the patterns that we might test you on, but not every question you have the same patterns here. Okay, so in this question they give you income statement, they give you balance sheet, they give you the opening balance and closing balance of motor vehicles, they give you the opening balance and closing balance of accumulated depreciation. They talk about depreciation over here. They tell you there is a loss on depreciation, and in the additional information they say that there is a motor vehicles. Okay, we have sold a motor vehicles for 3,000 cash. Okay, so we have sold a motor vehicles for 3,000 cash. That means I received cash 3,000. So straight away you can record this in your statement of cash flow under investing activities. Okay, under investing activities you receive 3,000. So there is a proceeds of sale of motor vehicles. That means you get money from the sale of motor vehicles, 3,000. So straight away you can record this in your investing activities. Okay, so this information you have recorded it in your statement of cash flow. At the same time, you can record it in your sale of asset. You receive cash 3,000 from the sale of asset. So debit cash 3,000 and credit sale of asset 3,000. Okay, so debit bank 3,000, credit sale of asset 3,000. So on the credit side of sale of asset, you have 3,000, and the debit side of this transaction will be at cash at bank. So now you put in all the informations that you have from the income statement or balance sheet. So one of the easiest information that you can put in your T accounts will be your motor vehicles account, opening balance and closing balance. So under your motor vehicles account, you have an opening balance of 20,000. Your opening balance is 20,000. Closing balance is 30,000. So you put all these simple items into your T accounts first. Okay, and if you still remember that I did mention that your accumulated depreciation, you have opening balance of 3,000 and closing balance of 4,000. Okay, accumulated depreciation, opening balance is 3,000, closing balance is 4,000. Accumulated depreciation is a negative asset. Okay, this is a negative asset, so your opening balance will be at your credit side. Okay, now these two, we have used all this information in the balance sheet, and then if you notice that there is a depreciation of motor vehicles of 6,000. So this depreciation, normally we debit depreciation expense, credit accumulated depreciation. So under accumulated depreciation, you will have 6,000 on the credit side, and the debit side of this transaction will be at depreciation. Okay, so depreciation would actually increase your accumulated depreciation by 6,000. Okay, now the last thing we need to do is to find out how much is the accumulated depreciation for the assets that we have sold. Okay, so 3,000 plus 6,000 equals 9,000. So the total here is supposed to be 9,000 as well. And the remaining balance of 5,000 will be the accumulated depreciation of the assets that we had sold. Okay, so this 5,000 here, we are going to put it in your sale of assets. Okay, so under sale of asset, credit side of sale of asset, you will have 5,000 from your accumulated depreciation motor vehicles. Okay, that means the motor vehicles that we have sold, okay, has an accumulated depreciation of 5,000. Okay. So when we sell the motor vehicles, right, we need to close the accumulated depreciation of that particular motor vehicles. So that's why we have to reduce 5,000 from accumulated depreciation, and this 5,000 we have to transfer it to sale of asset account under credit side. Okay. Next thing, we will look at the loss on sale of assets, loss on sale of motor vehicles. We are making a loss of 7,000. Okay. So when you have a loss on sale, okay, this will be something like our other expenses. This is considered as an expenses in our other expenses. Okay. So we debit loss on sale 7,000, which is an expense. Credit sale of asset 7,000. Okay. So credit sale of asset 7,000, debit loss on sale 7,000. Okay. So once we have done with this, okay, we don't have any informations on how much is the cost of the asset that we have sold. So we need to find it out. Okay. So what we can do is we add up everything on the credit side. Okay, which is 15,000. So the total here is supposed to be 15,000 as well, and the remaining balance here, which is the cost of the motor vehicles we have sold. So the cost of the motor vehicles that we have sold is actually 15,000. So for sale of asset account is very easy to reconstruct because you only need 4 items. The first item is the cost of motor vehicles that you have sold. The second item is the accumulated depreciation of the motor vehicles that you have sold. Number 3 is the amount of cash that you receive from the sale of motor vehicles. Number 4 is the gain or loss from the sale of motor vehicles. So let's say if you are making a loss from the sale of motor vehicles, you have to put it on the credit side. But if you make a gain from the sale of motor vehicle, you have to put it on the debit side. So in this case, we are making a loss on sale of motor vehicles. So since this is a loss on sale, we have to put it on the credit side. Okay, so you only need these 4 items to reconstruct your sale of asset account. Now for your motor vehicles account, just now we already put in your opening balance and closing balance. We did mention that we have sell off 1 motor vehicles which cost us 15,000. Okay, so if I sell off this motor vehicles is no longer with me. Your motor vehicles will be reduced by 15,000. Okay, we sell off this motor vehicles is no longer with me. So our motor vehicles reduced by 15,000. Okay, so credit motor vehicles, debit sale of asset. Okay, now our opening balance is 20,000. I sell off motor vehicles 15,000. I supposed to have a balance of 5,000. Okay, but at the end of the day, I have 30,000. Okay, the reason for this is because I bought in new motor vehicles that cost me 25,000. Get it? Okay, I repeat again. Opening balance 20,000. I sell off motor vehicles 15,000. So 20 minus 15 supposed to be 5,000. But at the end of the day, I get 30,000. Okay, I have 30,000 worth of motor vehicles, which means that I have spent 25,000, okay, to buy new motor vehicles. Okay, that means if I spend 25,000 to buy new motor vehicles, credit bank 25,000, debit motor vehicles 25,000. Okay, so this is a cash payment and I need to record it in my SOCF. So under my SOCF investing activities, I have payments for motor vehicles. Okay, payments for motor vehicles, which is 25,000 negative 25,000, because this is a cash outflow. So at the end of the day, my net cash from investing activities will be 3,000 minus 25,000, which is 22,000. Okay, So I have spent 22,000 in my investing activities.